Hello again, traders. Dwayne Chopper here, the Swing Trading Master, here to show you once again another trading example of how we can take advantage of this $1 trillion market. So, going to be taking a look at the Aussie Kiwi dollar daily chart and a forward chart to show you a short position that I've taken, which is expected to take advantage of this continued bearish movement in favor of the New Zealand dollar. Now, here you can see the strong downtrend that has been in place on the daily chart that has led to the formation of an outer downtrend line and this inner downtrend line. And with the recent formation of this area here, we can now also add a third line, which would now be considered to be the inner downtrend line. So essentially what we're going to be having here is this inner downtrend line. This would now be considered to be the outer downtrend line, with this third line here being considered to be the long-term downtrend line. So a strong downtrend in favor of the New Zealand dollar against the Australian dollar. And what is taking place now is that the market has recently U-turned below this broken consolidation channel to indicate that we're going to be continuing this bearish movement in favor of the New Zealand dollar. So as you can see here, the market provided us with signals in the form of these Tweezer Tops, which, as you will notice from the trading manual and across the currency market, are generally strong indications that the market is going to be starting a bearish U-turn. Now, when you see these on the daily chart, what you normally would do is then to go down to the forward chart to see the setup that has been formed as part of these Tweezer Tops. So taking a look at the pattern that has been formed here, you will notice that the market has created a downtrend, another downtrend consolidation channel with the resistance boundary formed with these two resistance points and the corresponding support boundary formed with these two support points. So what has taken place is that the market has formed this consolidation channel and has actually started a false consolidation breakout reversal. So as you can see here, the market initially attempted a breakout above resistance, but this failed and the market U-turned after hitting the broken support boundary of the larger consolidation channel set up here. Came back inside of the consolidation, and the expectation is that with this U-turn taking place here, this false consolidation breakout reversal, and the Tweezer Tops provided by the daily chart, in addition to the fact that we're in a strong downtrend line, these are all indicating that we have a strong possibility that the market will continue bearish and break below this support boundary. So this is the idea behind the trade, to take advantage of this expected bearish movement. Stop loss placed above the resistance boundary to protect the trade against temporary pullbacks. And the take profit, is set at this area here, 1.0438, even though the market is expected to move lower in the next couple of days. Now, as you can see here, the market is very close to hitting this major support point, which, as you can see, is at the 1.0417 level. So ultimately, or actually the 1.0418 to be more precise. So this is where the market is expected to move towards in the next couple of days. But in the short term, we can actually take short-term profits and then re-enter the market as it heads towards this major support point. So in the short term, the take profit area as part of the expected breakout is going to be at the 0.438 price point. And then we're going to be looking forward to re-entering the market and then looking for another trading opportunity. Or traders could also enter the market, place a stop loss at this area here, and then hold out until the market reaches that major support point. So those are the two options in terms of take profit. Taking a profit short term at this area here, which is where, based on the size of the consolidation, this is where the market is expected to temporarily hit and then temporarily pull back before continuing lower. Or we can hold out and wait until the market hits this major support point and capture even larger trading gains.